Yeah, perfect. I know. Now you can hear me? Is everything clear? Let me know if everything's clear. Audio should be fine now. Let me check. Yeah. No, so basically what happened, the wire was loose, so I had to connect it again. See, this is the problem when a lot of people put saying jaldi aao, jaldi aao, jaldi aao. You don't give me time to set up, and when I don't get time to set up, some small issues like this will happen. But it's okay. How's everyone doing today? All good? Everyone's nice, good, chilled, relaxed, having fun. Hope you guys had a good week in the past as well. Happy Sankranti, yes, happy Sankranti, happy Lori, happy Pongal for all the people who are down south. But yeah, it was a very good weekend. I hope you guys enjoyed the Friday. Markets not that great, okay, whatever is happening with the markets, but I hope you guys enjoyed the market. Forget all the markets and just enjoy what's happening with everything, right? Now, couple of things we'll look at today. Okay, let me have a small agenda for today, but then we'll do the weekend research session as well. So couple of things. How many of y'all, just to start off with, how many of y'all saw the previous video that I did on the infrastructure bit, right? I announced a giveaway. So a lot of people who don't know what this giveaway was should definitely go check it out. It's one of the biggest giveaways I've done for Jan. It's insane, okay, the giveaway. So if you don't know what the giveaway was, I will show that to you also in today's episode, just to rekindle whatever you're, if you have not seen it, I'm just going to refresh your memory. And if you've seen it, great. I hope you guys have already submitted everything. By the way, around 350 people have already applied for this. I'll tell you the exact number. 359 people have already given their responses for this. So I don't know, if you guys are not doing it, then you should definitely do it, but it'll be great. Take your time. There's enough time. I would rather want you to take time and figure it out than actually just coming in 2 seconds and posting something. Okay. Yes. So Jigsaw Lord is saying 100k subs soon. Now, this is what I want to ask you guys. Okay. I want to understand from your perspective, what do you want me to do for 100k? So a lot of people are like, what is the surprise for 100k, or what are you doing for 100k? So I don't know what to do for 100k, to be honest. This giveaway I should have planned during my 100k, but I did it right now because it's Jan and I want to start the year off with a bang. But I don't know what to do at 100k. So that is one big issue, and I think I'll reach 100k by this month end. Around Jan 30th is when I should reach 100k as well. Last date for the giveaway subscription is 26th of Jan, 26th or 27th of Jan. Actually catch 25th, the 26th itself, because I'm going through all the reviews right now. I'm going through all the submissions right now, and I'm doing my own research. Right? I'll talk about the giveaway, how to participate, but it's okay. So, sir, how will you read so many responses? It's not very difficult for finance with Bothra. It's actually easy because there are some responses that are like 2 lines, 3 lines. So those responses I'm not even going to look at, right? There are some that have actually gone deep dived into explaining how to connect the dots. So that is something that I would like. Now, a couple of things. Okay, I'll ask you guys anyway for 100k meetup. Neerat, I do not want COVID, please. I don't want to do a meetup at all. No chance at all. I'm not meeting anyone, right? So not at all, right? Okay, let me do one thing. Okay guys, one more rule. Okay, we're going to start the session now. So one big rule, do not spam, please. I'm watching the chat. Even if you put once, I am seeing everything. Okay, so I don't want you guys to spam like how JB is spamming right now. I saw it the first time you put JB. So if you spam, I will just have to directly put you into timeout because it just annoys everyone else. So please don't do spam. When you do it for the first time itself, मैं देख लेता हूँ, मैं समझ लेता हूँ. So don't worry about it. Another big giveaway, maybe not. Okay, let's see. Let me give you 1 or 2 options. Okay, now let's begin. Let me go to my session. Chalo, yeah. 1 sec. OBS. I like OBS. Okay. So I have 4 or 5 news articles that I want to read out to you guys before I begin. Now, just before I begin, so for all the people who are asking, by the way, this is the link to the giveaway. It is there in my last video, which talks about the three infrastructure stocks, but I'll share it again after this episode below. So basically the three, for all the people who don't know, the first winner gets a cash prize of 15k, stocks worth 5,000 rupees that I'm going to gift you guys. A Bose SoundLink wireless speaker worth 11.5. The link is here. 15-minute call with me. So a lot of people who wanted to do a Zoom call, this is, if you come in the first place, you get a 15-minute call, a custom Smallcase, 1 year ticker tape subscription, 1 year windmill Smallcase subscription. Basically that's one subscription that you can get all the paid Smallcases that are by windmill for free, right? So lot of things. Second prize, third prize, sab kuch hai, and how to participate when it closes 26 Jan, not 27, yeah, 26 Jan. So I'm going to send this to you after this thing. By the way, 359 responses already on this, and I don't even think people have really come up and done a lot. So there's still more things coming up, but again, I'll show you one by one what we'll do today. Okay. Oh yeah, a couple of other things. Okay. So my Smallcase that we had done. Okay. Now I want to tell you guys something. How many of you all remember this Smallcase when we made this? How many of you all were actually there with me almost a year ago when we made the 30,000 Smallcase? I want to ask in the chat. How many of you all were there 1 year ago with me when I made this 30,000 Smallcase? And I did it live with you in front of you guys, right? I did it live in front of you guys. How many of you all were there at this point? I want to know from the chat because I'll tell you why it's a little interesting. Tushar saying, nah, no, Finance with Bothra was there. Okay. So a few guys were there during the start of this, right? I don't know how many of you all invested in this. But if you had invested at the start, then you would have obviously made approximately 64% returns or 61% returns within almost a year. So when I invested, this was Feb 19, 2021, which is exactly 1 month away, And after that 1 month, the entire idea or the education or the reason why I did this, I don't know how many of you all remember this, but the reason why I did this entire 30,000 thing was like an exercise to have with you guys, that I will invest with you, we will do it together, and for 1 year me and you will keep it here. Why? I wanted to explain and I wanted to show you the advantage of long-term investing. Now, I don't know how many of you all have still held it. All the guys who said me, I don't know how many of you all still held it with me, but I'll tell you what, this journey of holding this was not easy for a lot of people, right? This journey of holding was not easy. Why? Because there was so many ups and so many downs and so many massive downs. Okay. For a lot of people, I don't know how many of you can relate to this, but I can relate to this. There were so many massive downsides, and I remember there were days where the stock market fell 3 days in a row, 4 days in a row, and this had gone down to 20%, and we were like, dude, what is happening? It's gone down so low, this is so bad, etc. But just think about this for 1 second. It's almost going to be a year, okay? Over a year, maybe next, in another 1 month, maximum thoda volatility hoga because of the results that are coming out, right? This is fundamental investing. This 161 either will be 150, I'm assuming a 10% downfall, or it will be 170, maybe a 10% up. Either which way, even if it is at 150, 160 or 170, which is around 50%, 60%, 70%, do you think it is bad for a 1 year return? No, it's a bull run. I completely agree. The bull run was great. For everyone, the bull run was great. But do you think it was good and the patience paid off? This is only for education. This is not to see how much returns we'll get. We were doing live thing and there were tough times. A lot of people were like, sir, I'm getting tension. I want to remove this 30,000. A lot of tensions were there, but it was okay, right? Someone was in the 5,000 Smallcase. So that's around 30% up. Actually, total returns is 30%, but we did some exits in the middle as well. Now, current returns are 55%, but the total returns were 30%. Now, I'll tell you one more beautiful thing. Exactly on Feb 20th, because Feb 19th, I did this entire buying process. On Feb 20th, if I exit all of this, right? If I exit all of this, do you know that I'm going to pay zero tax on this? I'm going to pay literally zero tax on this. After holding it for 1 year, because my gains are 18,000 plus 2,400 plus 140, right? My gains totally is around approximately 21 to 22,000 rupees. Comes under long-term capital gains, right? And if it comes under long-term capital gains, then I don't pay any tax on this because up to 1 lakh long-term capital gains is exempted. So we are in good shape, very good shape, in fact, right? So that is what I'm saying. And most of it, by the way, there are 2 stocks that have already crossed 100%, right? In the last 1 year, this is 11 months of holding. 11 months of holding, 2 stocks have crossed 100%. Naveen Fluorine has crossed 66%, Laurus 41, Indian Exchange, IEX 38%, Birlasoft 38%. These two we added quite recently, 2-3 months ago. That's why you don't see the impact coming in. But both of these stocks are amazing, right? And you have to give it time, you have to give it patience. Both of them are quite good. And Lotus, I think, is still going to go up easily. It's going to go up to 100% very soon. And our average buying price was 367. So that's what. Up to 1 lakh, no tax. So I'm chilling now. So I have no problem. But main idea is to show you, right? What is this? Now, what I was thinking was for 100k subs, as you guys said, 100k subs, what I can do is I can show you my top 25 stocks that I'm investing for the year. So I have something known as Super 20 or Super 25, right? I keep changing. I think it's around 20, but I have now made it 25. So I made it Super 25. So these are 25 stocks that I am going to invest for the next 1 year as a very safe bet for me, right? As a safe bet for me. What is safe bet? Safe bet means I want to keep it as a backup. In fact, in that 25 stocks, there will be at least 20 stocks that are fundamentally awesome, that have a very high potential for growth in the long term, and the remaining 4-5 stocks would be slightly risky. But that is why is that risky? Because I want that extra push, because sometimes they are risky, but if they do really well. But in a way, what I'm saying is risky is not very risky, right? It's not something that is like a penny stock. These are good fundamentally stocks, but they're very risky right now. So that is what I would say. So maybe on 100k, I'll come and do a video with you guys live, and I'll reveal the top 25 stocks that I'm investing, and you'll see it, because I've been talking about this from a very long period of time. And do you SIP on that? Yes, I have been SIPing on that, Aditya, from the last 4 months, I think right now. The last 4 months I've been SIPing on that. By the way, I don't think everyone can invest in the Super 20, Super 25. The reason being, it is very big. Like obviously 25 stocks with equal weightage goes up to around 2-3 lakhs per investment, right? If you want to invest, you have to pay around 3 lakhs to invest. But that's not the point. My point is, I'm going to show you those 25 stocks. You can pick and choose whatever you want, right, in that, and you can do whatever you want, because those 25 stocks are fundamentally so strong that even if you say, Shashank, out of 25 I'm going to take 10, I'm like, cool, it'll still work for you. I want to take 15, it'll still work for you. You want to take 20, it'll still work for you. You want to take 5, it'll still work for you, right? So all of these things will work for you, right? So I'm going to show you that on 100k. Whenever I do 100k, I don't know, but you guys can help me with 100k. But I think according to my calculation, 30th January ke aspas the 100k video will come up, or I will come live. I'll not even do I'll come live and show you everything. Cool. But again, I'm just reviewing everything because in the next 1 month, this will be over, and I can't believe I've held it for 1 year. Like, it's crazy. I can't believe I've held it for 1 year, but it's nice. It's very difficult to hold something for 1 year. That's why I keep saying that me and you will hold it together, because then you know that Shashank is also holding, so no tension. And I kept telling this 100 times to a lot of people, don't worry, don't worry, don't worry, don't worry. Nobody listens to me for some reason. But there were mistakes. I did mistakes. I tell you what mistake I did. In the start, I had bought Electra Green Tech. In the beginning, I had bought Electra Green Tech, and I sold it for a few percentage returns. I remember few 2-3%, 4-5%, I had sold it, right? Electra Green Tech. Now that was a mistake. Why? Because if I had held Electra Green Tech, it would have gone up 400-500% right now in 1 year, right? Because it actually went up so much, right? And I'll show you this. Let me show you. Okay, where is this? This was a mistake, and I agree, because obviously I'm not the best here. I do mistakes because this was me not holding. Feb 19th last year, kidhar tha? Okay, it was at 179 rupees, and if I had held it till now, it would have been at 364% returns. If I had held, and at the peak it was 400%. Till now it would have been 372. This would have gone above 100% easily on an average perspective. Subex, no, I have no regrets. I'll tell you why. Because Subex, we rode the wave beautifully, and then it didn't move after that. Right? We rode the wave of Subex perfectly till a point where I realized that it is not going to move for a bit. And that is where I said, okay, you know what? I'm going to stop now. I'm going to exit Subex. Not because of any problem, but I knew for a fact after that peak had happened from 25 to 50, we said we're done, right? And it was good. It was not bad. But Electra Green Tech was a mistake. Okay. There was Tanla platform. I got returns on Tanla platform, but I sold it out as well. I got approximately 100% returns on Tanla, and I sold it out. It went up by another 100%. So it's crazy. But I re-entered Electra. I'm going to re-enter Tanla very soon. It's again hitting 5% upper circuits. But again, there were some mistakes, but I realized that boss, jada ungli nahi karne ka, right? Electra, there was no reason for me to sell. I just sold it. Next time I won't do some mistake like this, but it's okay. I'm not regretful. Why? because this is fine. I'm not greedy. This is completely okay for me. This kind of returns are okay for me because this is something that I've put in front of you guys, right? This 30,000 I've invested in front of you, but imagine I have done the same investment in my other portfolio as well, which with a bigger amount, which is my savings, and I've done in what do you call that? And I've invested in other companies which are riskier that I don't come and tell you guys because it's slightly more risky. Like Explio was risky, Mastech was risky, but they all pay off at the end of the day. RACL, picks, they're all risky picks, right? And I told about this, but eventually it goes up. There were some bad calls as well. I mean, not bad calls, but sometimes things don't work out the way you want to, but it's completely all right. Right, so all these things. So maybe on the 100k, I will come and reveal my what do you call that? 20k. So Super 25. By the way, remember this? So, does anyone remember this? It was a weekend research that we did in weekend research 412. I think it was 412. So this was on December 4th. Basically a month ago we did this. We created the small case and I created with you guys the 20k small case on the weekend research of this thing, and it's already up by 6%. If you guys invested with me that day or maybe on Monday immediately after that, this has been up approximately 6% on that point, right? So it's not very difficult. It's okay. It's not very difficult at all, and I will reveal all of this slowly. One by one I'll reveal everything. Don't worry. Cool? Awesome? Yeah, core 25 I'll reveal. Okay. Yeah, lucky ones are the ones that followed me on first day and did not do rebalancing, which is, you would have made nice money. 100%. Okay, cool. Let's come back to the main point now. I'm closing all of these things. Ho gaya na? Okay. So this was the quick update. Now let's begin. Now, couple of things that are happening in the market now. By the way, this is results season again. Okay, so we're going to see results of banks, we're going to see results of IT companies, and we're going to see a lot of plays in the IT sector. What happens when IT companies results come out? They either give a massive dividend, they either give a massive buyback. All these small things keep happening. Whenever a result season comes out, you expect something awesome coming in, right? Now look at this. TCS recently came out with a massive buyback. How many of you all know this? Okay, Tata Consultancy Services recently announced a massive buyback and the stock obviously reacted to this buyback. Just look at just look at TCS, right? It has never not given you money. Just look at this dividend, bonus dividend. Okay, now I have a big problem with a lot of people and I want to change your thinking a little bit, right? I did a crypto video recently and I said the top 3 blockchains or the top 4 blockchains are great, right? Like I was talking about the top 5 coins, top 6 coins. And you know, most of the people replied on that, or maybe most of them even replied to me directly saying, Shashank, why are you recommending something that's already in the top 5? It will not go up much, right? It's already at such a big $1 billion market cap. It will not go up much. And I'm like, that's such a wrong way of thinking. You know why it is a wrong way of thinking? Can someone in the chat tell me why investing in high market cap or large cap or blue chip, right, is not the wrong way of thinking? I mean, is the wrong way of thinking that I should not invest because it already itna upar hai aur kitna jayega upar, right? It is a very bad way of thinking. I'll tell you why. If you remember Ethereum, okay, Ethereum 5 years ago was at top 2, top 3 max. It was always in 1, 2, 3. Now you're telling me Ethereum at that point also the logic is the same. Shashank, it's already in the top 3 coin. Abhi invest karke kya fayda, right? Ethereum was at $100. Abhi $3,500 pe hai. Now again after 5 years, if you look back, you'll be like, shit, at that point Ethereum was only $3,500. Now it is at $15,000. But my point is the market also is growing, right? People are making money. The world's economy is growing, everything is growing, inflation is growing. So by default, with inflation growing and the world making more money, you will make more money, right? So investing in a company that is already big is not wrong. A lot of people think it's wrong. So look at this, like TCS, it's 14 crore. I mean, it's $1 trillion, 1 trillion rupees market cap, right? That's what they keep saying. 1 trillion, it's broken the 1 trillion club. Now a lot of people will be like, Shashank, it's broken the 1 trillion club. How can you buy? It's already so big. It's such a big company. It's kitna hi dega returns. And for these people, I'm like, dude, are you kidding me? Just keep this for 10 years and tell me how much kitna hi dega return after 10 years. First of all, I want you guys to observe one more thing. Do you know that TCS is almost at its all-time high and it's going to break its all-time high? In fact, it's broken its all-time high. The all-time high was 3954. Now it's at 3968. It's just broken its all-time high. Now, if it goes up again and confirms the breakout, it will have given a breakout at all-time high and it will go up even more. So the logic of Shashank, it is already a big market cap company. It won't go too high. In the last 5 years also, it was in the massive space. In the last 5 years, this company, wherever you would have invested, you would have made around 246 returns in the last 5 years. right? Is 2.5x in 5 years a bad amount? If it's a bad amount, do not invest in this. Go find some penny stock. But इसमें risk कितना है? Look at the risk return ratio, right? Risk is very less in this. I mean, it's still there. Obviously, stock market is a risky game, but risk versus return. I am more safer by investing in TCS. Why? Because it is a cash cow. And funny thing is, they're not giving a bonus. They're not doing a split. They can't do a split. They're not giving a bonus, and they're doing another buyback. When a buyback happens, it is it is amazing for people like me and you, because shareholders will enjoy, right? Shareholders will enjoy. Nothing in front of FANG. Exactly, FANG also. Okay, if a lot of people who don't know FANG are these top companies in US: Facebook, Apple, Amazon, Netflix, Google, right? Now, if you look at Amazon as well, you'll be like, Shashank, it's already so big. It's only going up. I'll show you Apple's chart. I'll show you both, right? Look at this. If you think Apple is already at an all-time high, it is only going up to making new all-time highs, and it's given 476% return in 5 years. 476% return in 5 years. Already at an all-time high, constantly going up. So don't have this misconception. So a lot of people have this, that if it's already big, how much will it go up? That's wrong. Because I'll tell you what, stocks like Bajaj, TCS, Reliance, these are all heavyweights on the Sensex index, right? All of these are heavyweights on the Sensex index. Heavyweights means Sensex index is a compilation of all these companies. Now, if you are predicting that India is going to grow in the future and Sensex will hit 100k, for Sensex to hit 100k, it has to go up by almost 100%, right? For Sensex to go up by 100%, don't these things need to go up by 40-50% minimum? So if you are saying Sensex to upar hi jana hai, so obviously these stocks will also go up. No, it is by logic, by design, it is built like that. So don't also, what I'm trying to say is, a lot of people just try to go for penny stocks, right? Just quick money I want to make, quick 300%, quick 200%, quick 50%. But you know, you lose your money also quickly like this in that 50%. In fact, if you just invested in this for 5 years, even if you put your dad's money in this or mom's money in this or some safe investment here, it was fine. No problem at all. So stop this logic of, Nestle is also a big example. So many stocks. So I'm just telling, see, if you're following me, I try to explain it in very simple terms for people who are not following me as well, for the new guys. Do not have this misunderstanding that, and another second misunderstanding, sir, 4,000 rupees stock, how can I buy, sir? It is so expensive. One stock, what can I do? Right? It's one stock I can buy, that's all. Who cares? Buy one stock. Right? It doesn't matter, because I've told you 100 times, percentage matters. Don't worry about the stock price. Percentage is important. Same thing 5 years ago, this was 1,000 rupees. You would have told me, sir, 1,000 rupees, only one stock I can get. 1,000 rupees is now 4,000 rupees. You become 4 times. So don't worry about stock price being high. Now I understand if it's Nestle. Oh yeah, it's too expensive, right? Okay, fine. Even I wouldn't, I mean, I have bought Nestle, but it's too expensive. So I don't expect you guys to buy this, right? Because you might be like, you know, Shashank, it's too expensive. MRF, too expensive. It's not like they have not given returns. Even they have given returns. But percentage matters. Now, very good question by Finance with Botra. He's saying, sure, sir, isn't now everything overvalued? It is overvalued. Okay, but I'll ask you one more question, Botra, right? Finance with Botra. It is overvalued, but isn't it overvalued from the last 2 years? I mean, if you're actually thinking about overvaluation, last 2 years, everything is going up, right? Now, 2 years ago, if you said, you know, overvalued, I'm not investing right now, you would have missed. 1 year ago, if you had said, I'm not investing right now, overvalued, you would have missed. So, overvalued hai, manta hu, I agree, overvalued hai. But chalne do, jab tak hai jaan, I keep saying this, right? Jab tak chal raha hai, chalne do. Okay, now it will go up another maybe 30, 40, 50%. And then you will be proved right. Then the stock market will correct and you will be like, shit, I knew this, it was over, you know, it was corrected. Okay, you are up 50%, it corrected 20%. No problem, you are still up 30%. So don't overthink about whether it's overvalued, undervalued. Jab tak chal raha hai, maze le lo. Right? When it falls down, exit, finished, game over, and then reinvest again. That's it. It's not difficult, and you know when it's going to fall down, when you know when it's going to fall up. So go up. It's okay. It's fine. So no issues. Paytm analysis, boss. Paytm is something else only. I don't know how many of you are on Twitter. Are you guys on Twitter? How many of you are on Twitter here? 8% up. Wow, must be a lifesaver for all the people. But how many of you are on Twitter? Right? If you're on Twitter and you're observing what Vijay Shekhar Sharma is constantly tweeting, after the IPO, it feels like he's changed a bit, right? He's only justifying why his stock price has gone down, right? He's only coming and saying stock price niche gira hai and it is not right, and I'm comparing myself to Tesla, then I'm comparing myself to somebody else, and he even came and blamed market conditions and said market conditions is bad, that is why Paytm fell down. And people in the comments are like, market conditions are not bad, your Paytm price was overvalued, right? It was a big mistake that you did. So he's constantly talking about why the stock price is going up. Instead, he should be talking about what are the next plans for Paytm. How will Paytm do well in the future, right? So it's constantly, I don't know, it's weird. But either way, he's feeling bad, or maybe it's a guilt kind of a thing that the stock price is down 28%. But he should just play the long-term game and focus on the bigger picture, right? Eventually it'll go up. ऊपर जाना ही है, right? You focus on the company and it'll do well. Bad timing, I don't agree. Why? Because bad timing कब का खत्म हो गया? अभी good timing भी आ गया बीच में, right? Market went up, but he overdid it, right? He compared it to Bajaj Finance. Yes, he said I gave more loans than Bajaj. Why are you comparing? Just focus on your business and we are smart guys. We will see it, so we don't worry about it. But again, that's not my lookout. When I go IPO, maybe I'll understand, but I don't understand what he's going through. Okay, some couple of things. Elon Musk recently said that Tesla merchandise will be buyable using Dogecoin. And obviously, what happens when Elon comes and says Dogecoin starts pump, or like a lot of people call it pump it. Okay, so it just goes up and then it comes down. Every time it goes up and then comes down, then it goes up and it comes down. So Elon Musk came and said something, okay fine, it's all gonna go up, right? Everything's hunky-dory, back to boom, and then it'll come back down again. Don't worry, it's come up to rank 11, my god. So the Shiba Inus and this again is very risky. You have to just wait on Elon, but basically he's the only one who's actually pushing this price, so that's fine. Another very interesting thing, Jubilant FoodWorks, which is one of my favorite stocks, okay? Domino's Pizza is considering a stock split proposal. Okay, why? Jubilant FoodWorks is currently at 4,000 rupees. So they're planning to do a stock split right now. If they do a stock split, what happens? The stock price will become cheaper, but it doesn't affect anything about the business. It doesn't affect the fundamentals of the business. The only problem is the P ratio is at 223. The only problem is the P ratios at 223. Dhak, right? But again, as I said, jab tak hai jaan, chalne do jab tak chal raha hai, fir enjoy karenge. Right? So no issues. When it falls down, we'll fall down. Fine, theek hai. But as long as it's fundamentally good, it's okay. And they're doing really well. So they're planning to do a stock split very soon. And they're talking about this. So let's see what is the stock split. Currently, alteration in the company, currently they have face value of 10 rupees per share. So I don't know, they might, usually at this point, they just do a 1:1 split. So it'll become 5 rupees per share and the stock price will go from 4,000 to 2,000. But I feel 2,000 is also still expensive. So maybe they might do a bigger split, right? So let's see, we don't know, but they'll come up soon. Either which way, when something like this happens, thoda market mein energy aa jata hai, right? Very good. Oh, one more very interesting news for all of you guys from the EV space. Okay, Hero MotoCorp is investing another 420 crores in EV startup company Ather Energy. Now, I don't know how many of you all have followed me before, but Hero MotoCorp has a majority, not majority, but has a lot of stake in Ather Energy. Okay, so if you want to see, I'll show you, right? So Hero MotoCorp, I think earlier had 34%. Yeah, so prior to the proposal, Hero MotoCorp had 34.8% investment. Right, post the investment, the shareholding will increase and exact shareholding will be determined according to Ather's capital fundraise. So basically what is happening is they instead of building out the entire infrastructure for Hero MotoCorp to actually build out the infrastructure, it will be difficult. So they're just acquiring stake into Ather Energy, and eventually me and you both know what's going to happen. They'll just buy out, right, Ather Energy. Loris at current level, sorry if Loris was already called out, joined 10 minutes back. Yeah, Loris is so my target for Loris is around 1,000 in the next, maybe in the next 2 years, right? So I'm looking for 1,000 target in the next 2 years, unless and until something goes really wrong. Okay, another very interesting, weird news. New life insurance policy. By the way, guys, you need to listen to this, okay? Now, insurers put in place a waiting period for people who have recovered from COVID. So if I've just recovered from COVID, I cannot buy a new life insurance policy. And even if I buy a new life insurance policy, it won't kick in for anything related to COVID, and there's a waiting period. Now, this was something that people did not take in very good light. People got slightly irritated with this. Why people got slightly irritated with this? This is because you should not put a waiting period for COVID, because this is something that we don't understand. But you need to understand how many ads. My God. Okay, is my ad blocker off? No, it's on. Okay, so you need to understand one more thing. So insurance company works in a very weird way. Insurance company give you insurance. Okay, number one, they give you insurance, so something happens to you, they have to pay this amount. But to make themselves safer, insurance companies go and reinsure themselves from another company. So there's something called reinsurers. So reinsurers are companies that insure the insurance company that in turn insures you. So reinsurance company insures the insurance company, and insurance company insures your life. So you see how it works. So something happens to you, these guys pay you money, and something happens to them, they pay them money. So it's like that. Now what happened is, reinsurance companies have had a very, very tough year. So let me show you this, right? Let me show you something very interesting thing that was said. Wait, let me go down. We have seen that reinsurers have not been able to do good business over the last 1.5 years since the COVID pandemic, because a lot of claims, yeah, I should use Brave browser. Everything's logged in here, so either way, but a lot of claims, right? So when a lot of claims happen, obviously it's bad for insurance companies, because they depend on this. They depend on you not doing a claim. That's why when you don't do a claim, there is something called claim bonus, no claim bonus. So whenever you don't claim anything in the entire year and you've paid insurance, you've paid your premium, next year they'll give you something called as no claim bonus. Oh, Shashank, you didn't claim anything? Next year I'll give you a bonus on your entire claim amount. But by the way, if you claim it and you actually put that, next time your premium becomes automatically higher. Why? Because they're like, अरे ये आदमी मतलब अभी तो admit हुआ, मतलब थोड़ा problem है, something might happen. So they're only hedging risk. Okay, cool. I think Hikal, I'm assuming a lot of people are asking, I think you should exit. There's something that I recently read something from somewhere. Hikal has done something really weird with respect to corporate management. So I would stay away from it if you have invested right now. One more interesting news article that I found. Okay. Look at this. Top listed hospital companies managed to cut debt and push up profits. Now what happens is, when this entire COVID pandemic, etc. happens, the hospital industry is enjoying. Amazing. They're enjoying. I mean, obviously they're not enjoying because it's sad what's happening in the country, but for the profit and loss statement is enjoying really well. Why? Because the profit and loss statement suddenly sees so much profit coming in, because there's so much footfalls coming into a hospital. So much profit is coming in. Now this is the best time when you have a lot of profits, and hospitals also are a very heavy asset business, right? Heavy asset business matlab, if I have to make another hospital, I have to put upfront investment, maybe 100, 200, 300, 400 crores. And by the time that hospital actually recovers my entire money after expenses, the return on investment takes a few years, and then it becomes free cash flow. But now, because so many people have come and started going to hospitals because of the COVID pandemic, their profits have gone up. Now, what these companies have done, or what these hospital companies have done, very smart, as soon as the profit went up, they took all that profit and cleared their loan. If you clear the loan, what happens? Your interest rate goes down. And if the interest rate goes down, you don't have to pay the bank a lot of money. So now your cash flow becomes more better. So it's automatically an increase in the bottom line, which adds up to the top line again. So that is what it's great, right? So you should definitely check out this. A lot of basically there's 10 listed corporate. I'm just going to buy this subscription. I actually have it. I don't know where it is, in which ID I've bought this, but this is very interesting, and this is a trend that a lot of people are seeing, right? So you should have a look at this, and a lot of companies are there in this listed space that you should definitely keep out. Okay, nice. Yeah, cool. I think I spoke about the stock split. I'm going to close this. Also, another thing I want to mention, the US stock market is going down constantly. Why is the US stock market going down? COVID cases USA. My God. क्या shock हो जाएगा हम लोग. Look at this. Just look at this. I don't even have to show you. This is like a stock chart of Tanla maybe. It looks like Tanla stock chart, right? It didn't move for so long and then suddenly just moved up. Just look at this. It looks very similar to this. Tanda's just hitting 5. What a guess. Okay, but it's just going up, man. Just look at this. The COVID has just shot up in US, which is really bad. But most of them are vaccinated, so it's okay. It's fine. Another thing is the Fed have said that they're going to increase the interest rates sooner than later. Why? Because the consumer price index has gone up, which is your inflation has gone up. By the way, India is starting this quarter's inflation at 6%. So 6% inflation is going on. And hence you will see that the Dow Jones year to date, okay, year to date is basically from now, like Jan, right? But it's going down. In the last few sessions from 4th Jan, Dow Jones has just been slipping. Now, what do you think this is? Okay, what do you think this is? Fed will increase interest rate, great. COVID also is there, great. But do you think this is an opportunity? Guys, I want to ask you guys this question. Do you guys think this is an opportunity, or do you think, Shashank, no, this is not an opportunity, US will crash? US is overvalued, US is etc. I'm looking at it from an opportunity perspective. Why? Because now I get to pick out stocks that are very good and that are going down constantly, right? And I want to see the stocks that are going down. So for example, if you look at Apple stock, right? Apple stock obviously is going down. Let's see year to date. From 182, it has fallen down to 172, $10 down, right? It's gone down 5% from year to date. Good time. It's not a great dip. I mean, I would have liked a bigger dip, but it's not a great dip. But either way, who cares? I mean, it's a 5% drop. Opportunity time, right? And if you look at, I'm going to buy a stock right now with you guys, not today, but with you guys this next week. I'm going to buy Nike, right? So look at the year to date. Nike is dropped down by 10%. Awesome. Shit, I hope this continues for another week. And if it continues for another week, then I can buy it at minus 15%. So next week, I'm doing the stock video, right? Where I'm going to buy this with you guys. And I have to do it in the evening. I can't do it at this time. I have to do it in the evening. So I'll show you all that because US market opens in the evening, but it's great, right? So this is an opportunity for all the people who want to take it. Why is it an opportunity? Because over a long period of time, the index eventually goes up. So your stocks will also go up. Simple as fact. Okay, simplest fact. COVID cases have gone up. Good. Every time a wave comes, take advantage of the wave, right? And I'll tell you the best thing. Every time a wave comes, you should do this, right? Fourth wave aa gaya, sit at home. Do not go out. Just sit at home. Do research on stocks. Find out what are the stocks that have fallen the most because of the fourth wave. See what new lockdown rules are coming and what industries it's going to affect even more. And then correlate the two. Buy it at the dip, and then obviously it goes up when there's nothing like that. And then fifth wave aega, again the same thing, right? So we will figure. Cool. Awesome. Which app are you using for US stocks? I've checked both apps, Vested and InMoney. I have partnered with one. I will show you eventually. Next week, I'll come and do it with you guys live. Don't worry about it. But it doesn't matter which app I use, man, or which app you use as well. It really doesn't matter because it's all the thing that matters is the stock, not the platform you're using. Whether you buy something on this broker or that broker or some other broker, how does it matter? It all depends on the stock because the stock will give you enough. I've seen a lot of people do this. Shashank, brokerage, 5 rupees, 10 rupees, 15 rupees, 20 rupees, very high. I'm like, dude, doesn't matter. That stock will go up 1%. My brokerage plus profit is already sorted. So why are you worried about that 5 rupees, 10 rupees, 15 rupees? Relax in life. A lot of people overanalyze on brokerage. I don't overanalyze on brokerage. I'm like, it's fine. I'm making money, so it's okay. Chalega. So don't worry about it. Your US portfolio is down 20%, Rajesh. Good time to average right now in your Jan's income. Cool. Let's do weekend research. Let's take a stock and do research. Shanti rakho, bhai. I'll do it next week. Everyone's like, what is this? Is it vested or in money? Vested or in? Do hi to hai options. I will do. So don't worry. I have accounts in both. I saw both. I didn't like one. So I contacted the other and I already invested something in the other to try it out. Felt better. I didn't like one and I'll tell you why I didn't like it also. There's a legitimate reason why I didn't like it. But again, I'll tell you everything next week. Don't worry. Relax. InMoney charges a lot of hidden charges. I'm not worried about the charges, as I said. It's something else that pissed me off a little bit. With something related to privacy, which I didn't like too much. But again, okay. So guys, for all the people who are new, you have to do two things. First, you have to click on the like. Thank you, Glavin Pinto, for the donation. Appreciate it. You have to click on the like button below. And you have to put the name of the stock that you want on the right. I will choose 4 stocks and I will put up as a poll. You guys have to check which is good. Devyani International, have we done it? Okay, let me do Devyani. Papa is spamming so much. Give me more options, guys. Affle India, I think we have done long ago. Tata Steel, come on. Rakshit, Tata Steel is good, don't worry. Rakshit Gowda. Oh, I think you know Kannada then. I'm assuming you know Kannada then. Guys, click on the like button. There are 737 people watching and there's 235 like. It feels like an insult. Or I'm grabbing your attention too much, which is either which way great. Dmart, okay, let's see what's happening with Dmart because a lot of people are asking for Dmart. Dmart is fine. There was someone who said they want something last time, yeah, and I promised I'll put in the thing. It was a very good company, and someone said, please do weekend on your next weekend research, please talk about this. I'll check the comments. Interesting. Oh yeah, Kajaria Cements. Kajaria Cements, yes. Ceramics, not cements. Okay, that is this one. Okay, cool. One more. I need one more, guys. Guys, if you don't like, I'm not taking the question. Please like. This is very sad. Apollo Hospitals, yeah, why not? Why not one hospital also? Because I'm looking at the hospital trend and I don't think this COVID wave is going to get over for another 2-3 weeks. So this quarter is going to be very interesting for Apollo Hospitals or any kind of hospital. So if you want to do that, we'll check out. And it's also good because I want you guys to see, I would prefer Apollo Hospitals. The reason why I would prefer Apollo Hospitals is because you guys would get to see how an hospital's balance sheet and how an hospital's entire system works, right? So it'll actually be good for you guys to see how hospitals make money and how the bed allocation comes in and all that. But it's okay, you guys can choose. A lot of people choosing Dmart right now. Fine. Also, the reason why I don't, I mean, Dmart is fine, but the reason why I'm saying no, I mean, I didn't want to do Dmart is because there are a lot of research reports and articles on Dmart, man. Like, for example, let me show you. Dmart Avenue Supermarkets, name of the company, go to reports. There'll be a lot of research reports. 11 Jan, just now it came, Geojit Paribas. They have given a sell. Oh, come on. They have given a sell. Okay. So this is something that you can see. There is also another one by ICICI Security. So we'll see all that if you want. We'll go through it one by one. So we'll go through that. We'll go through this as well. And now COVID time, so obviously Dmart is not good. Paytm I'm not going to do. I have recently done Dhruv. I have done a Paytm IPO review, and in the IPO review itself I said it's not a great company. I was not up for it, right? So there's nothing that's changed after the IPO. So I wouldn't like do a research, do a report again. Dmart fine. I don't think I've done Dmart in the past. Okay, so I think there's 370 votes for Dmart. The rest of them are just watching the stream, not voting. By the way, the voting is anonymous. Just saying. Okay, let me just log into that trend line one sec. Yeah, I like this shirt, man. It's Goku forever. Big Dragon Ball Z fan for all the people who don't know. Geojit Paribas. Okay, now I can just go back to that. Just see this, guys. A sell over here, the sell on this. Everyone's giving a sell. I'm looking at only the Jan ones, okay? Accumulate, okay. 3 different research reports, but we'll look at everything one by one. I feel I've done Dmart before, but okay. So I don't invest in Dmart. I have not invested in Dmart, and I'll tell you why my logic of not investing in Dmart. Okay, cool. I'm going to stop. Dmart is the clear winner with around 492 votes. Favorite Dota hero, Nature's Prophet and Huskar. Yeah, I chose Devyani, but people didn't choose Devyani, and it's community research. Okay, so a lot of people want, out of 450 people, around 250 people, 500 people, 250 people want Dmart. So let's look at Dmart. And I'll tell you why I'm not investing in Dmart. Number one. And we'll do Dmart proper analysis, okay? So let's look at Dmart's max chart. So Dmart has been a consistent compounder over a long period of time, no doubt about it. Since its IPO, it has been a consistent compounder. The reason why it's been a consistent compounder is because the economics of Dmart is amazing, and the person who's running it, which is Damani, Radhakrishnan Damani, is obviously one of the best investors out there in the market, and he knows exactly how to run a business. He knows exactly how the stock market works. He's the perfect mixture of understanding how stock market works, right? And he is the perfect mixture of understanding how a business works. So he's amazing. Like the management team is amazing, right? Now I know Dmart is obviously like the best thing right now, and it looks awesome. So whenever I invest with a simple principle that would this be amazing in 5 years or 10 years down the line. So whenever I invest in any company, I only look at, will it be awesome in 5 years? Will it be still there in 5 years? It'll still be there, but will it be awesome in 5 years? Will it be amazing in 10 years? So that is the way I think about, right? Now I'll tell you two things, right? One, first of all, the P ratios, again, as usual, insanely high. So let's look at everything. Okay, let's look at the revenues, and then we will look at the what is this? How much they do bullshit, no? Okay, see this. Yeah. So when was this, by the way? 13 Jan. Okay. So everyone's giving a sell rating. Dude, calm down, Mint. What is happening to Mint? It's like it's doing some disco dancing, right? Look at this. It's just doing some disco dance. Calm down. Okay. Now the third quarter result for FY21 blah 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 has come out as a huge disappointment for stock market analysts and brokerages. The retail corporation founded by Damani has reported jump in its total income from 7,600 to 9,000 crores, which is great. However, this total income got nullified as a retail corporation that operates a chain of hypermarket in India reported huge rise in expenses for the same period. But instead of doing this, let's go directly into their investor presentation. First of all, I hope everyone knows what Dmart or Avenue Supermarket does. Right, so Dmart, Avenue Supermarket is very simple. They run departmental stores. They have a very smart way of running departmental stores, by the way. That is where the uniqueness of Dmart comes in. They know exactly, so everything that you are seeing, right? Everywhere you see a Dmart store, they have thought about it very, very, very well before buying a Dmart store. I mean, before investing into that Dmart property. Right, so that is why. Okay, guys, stop spamming names. No more names. We're done. This is what we're doing research today about. Cool. Now let's look at what has happened with Dmart. And obviously, Dmart is one of the prime candidates of getting screwed big time because of COVID. Right, COVID is obviously creating a massive issue for Dmart. So this is sad. Now during FY21, we have seen degrowth across our key financial parameters of revenue. By the way, when was this research report of? July 20, 2021. This is actually very old. I don't need to see this actually. This is too old. Let's not see this. Let's just go directly to their annual investor report, right? Let's go to their financials and check it one by one. No, I don't want investor presentation. BSC India, Dmart. Financial results, here it is. Okay, so let's look at the recent financial result. Cool. This is as of December 2000. This is last quarter. This is right now. Okay, quarter 3 as of December 2021 quarter ended. So let's look at their result. Okay, and all of this is in crores. So this is how you see. I hope you can see it. I'm zooming in as much as possible so that you guys can see it. Okay, now revenue from operations. Oh, this is very interesting, guys. Revenue is going up. That's a good sign or a bad sign? It's a good sign because revenue is going up, right? And it's gone up quite significantly also. From 7,600 to 9,000 it's gone up, which is quite a big jump. In fact, if you look at from September to 31st December, it has actually gone up by around 2,000 crores. So that is very, very, very good. My internet is super fast. Thank you. It's Giga, not Giga, but it's that Airtel's really good one. So in the year ended March 2021, which is last year, they were at 23,787 crores, and 9 months ended of 2021, they're at 21,746 crores. The same thing last year in December, they were at 16,480 crores. That means in the last quarter, they got around 8,000 crores to get this amount. So we are already at 21,000 crores. So that means on a year-on-year basis, the total revenue has gone up. If the total revenue has gone up, guys, why are people getting salty? Why are people getting irritated? Why are people saying everything's going down? Like why are everyone derating it? Let's go check it out. Okay. Now, from a last year to this year perspective, great, right? Revenue is up as well. Let's look at the expenses because expenses have gone up apparently. But revenue has gone up in proportion, expenses going up, I understand. But has it gone up a bit too much? That is something we will have to look at. Now look at this. Expenses, purchase of trade in stock or stock in trade is fine, 7,000 to 7,500. That's okay. This was something off last year because this was changes in inventories. Now they've got more inventory here. Employee benefit expense marginal increase 129, 141, not that much. Depreciation is completely fine. Other expenses have gone up also very marginally, like around 40-50 crores. So that is also not bad, right? It's all unaudited. Yeah, that's okay. They won't take such a, Damani will not take the risk of doing unaudited and showing wrong financials, guys. Please understand that. If he does, then he will have a massive issue. Leave that. Let's go into it more detail. Okay, so 781 crores, 597 crores this last year, and if you look at the profit before tax from a year 9 months ended perspective, 1500, 980. So both of it looks good. I mean, I would say it's a growth, right? It's still a growth. Let's look at more current tax. Okay, fine. Net profit before tax, everything's fine. Now if you look at the EPS has gone up 17 to 11, EPS has gone up 9 to 6. So why is it a big issue, right? First of all, why is it a big issue? Why are people saying this is not good? Again, let's keep going down and seeing if there are consolidated financials. Now what we saw was standalone financials. Now let's look at if there's any difference in the consolidated financials. As of now, 22 crores last year, it's great. 20 crores last year, 15 crores last year, that's fine. Instead of, yeah, this is also good growth in revenue. 500 crores increase in stock trade. Everything else looks marginal again. Nothing is out of place or very, very weird. If you just go down directly to the EPS, there is an EPS growth, there is an EPS growth. So everything looks good. So guys, what is the issue? Right? So this is something that a lot of people will try to understand, try not to understand. Now, can I tell you one thing, right? As I said, markets don't work on only financials, right? I know financials are like the core parameter for markets to look at, but entire companies works on a massive different scale. There's so many things. First of all, there's valuation, right? Now, if a company is doing really well and it's growing, is it growing too fast? If it's growing too fast, then my expectation also it's too high, right? And plus in India, we have very high expectation ratio. Yes, a lot of people are saying the same thing, right? In the chat as well, valuations very high. A lot of people have expectations, right? It's very typical in an Indian family. 95%, very bad. 99% Rahul ko. Why you got 95%? So expectations say kam tha profit. And I've explained this once before where Indians or we usually tend to expect more from a stock and it doesn't perform well and it falls down, which is sad because from a fundamental perspective, it looks bad, it looks good, no issues. Let's go check the balance sheet. Where's the balance sheet? Total EBITDA, okay, all that is fine. Show me balance sheet. Profit and loss is okay, my dear friend. Show me balance sheet. Wow, no balance sheet. Amazing. Very, very, very amazing that there's no balance sheet over here. They've literally given their profit and loss statement and have not given their balance sheet. Okay, let's look at some of the things if there's anything in fine print. Okay, all this is fine. This is fine. The parent company through QIP has allotted 20. Oh my God. QIP has allotted around 2 crores equity shares to QIP buyer. QIP buyers at an issue price of 2049. What is the issue price? 2049. What was it before this? When did this result come out? Right now. Okay, that's very weird, guys. Where did it go? Okay, they've allotted 2 crore shares to eligible qualifier at 2049, including a premium of 2039, aggregating to 4098 crores on 11th February 2020. Okay, this is last year. Okay, cool. That is not an issue. Parent company has also issued stock options. 2016 is convertible to so much equity shares. Now, whenever this happens, whenever new shares are given or whenever equity shares are given, it comes out in the market which dilutes your thing, right? EPS looks good. 29 stores were added here compared to last year. EBITDA looks good. So there's growth. And the growth is quite significant, but they're showing year-on-year growth, not quarter-on-quarter growth. But if you look at quarter-on-quarter growth also, it is good. So my question is, if you see all this and you still say this is not good, why is this bad? Okay, so let's look at it. Let's look at everything. Now you understand why I keep saying that financials are not the only thing that you look at in the stock market, stock price, right? Why is the stock going up and down? A lot of people say financials are great. Why is it still going down? No, it's not because of that. Let's look at the balance sheet as well. Balance sheet sadly won't get updated, but this will be outdated balance sheet. See, they're making... Okay, let's look at cash flow first. Yeah, cash flow is very negative. Okay, but that's also because capital expenditure is massive that I appreciate. I mean, if capital expenditure is this good, I don't mind you being slightly negative on cash flow. What is capital expenditure means? No more stores are being added. So that is great. I want more stores to be added. Why? More stores equal to more top line, more revenue. But then I have to also look at two things, right? I need to look at what is the reserves and surplus. So he has 5,500 crores in reserves and surplus as of 21. Then I need to look at what is your loan. Loan amount is not that much. So total current liabilities are only 365, both long-term liabilities. Let's look at other liabilities here. Okay, nothing. There's barely any liabilities, guys. So it's completely all right, even from the liabilities perspective. Accounts payable is 730 crores, which is quite high. But again, I think they work entirely on a credit cycle. So that is quite interesting. Now, after understanding both of this, let's understand why is it still going down, right? Why is it still going down? Guys, if you don't understand what I'm saying, please pause, please stop. I can repeat whatever it is, right? If you feel I'm going too fast, because a lot of new guys are in this space as well. So, total income got nullified as a retail corporation that operates the chain of other reported a huge rise in expenses, but it was not that big. So I don't know what I'm missing here. See this, sales density is still around 9% shy of Dmart's typical run rate. Revenue mix remains essential heavy, ergo lower than expected margins. Okay, wait, let me just do one thing. Let me directly go into the research reports, because research reports give you a beautiful understanding of what is happening. Okay, let me zoom in. Now, this is why I say always read research reports, because research reports gives you a massive understanding into the entire business and why it is going down. So Dmart operates and owns most profitable supermarket, Dmart, okay, which is Avenue Supermarkets. They sell products like this, which is not FMCG, non-food, apparel, everything. We maintain sell rating with a target of 4150. 4150 is the target of the sell rating. That's basically a small, not even a 10% dip. It's a very, very, very minute dip. Okay, factoring likely impact due to resurgence of COVID cases in the short term and expensive valuation. Yes. So I think, I mean, looking at what's happening, even if you leave COVID aside, it's basically a PE correction game. It's basically a valuation correction game. Why? Because the valuation is extremely high. Now, even though they are performing well, even though their PE ratio is going up. Oh, someone just donated. Okay, thank you, Chetana. Even though, what is P? Ashish is asking. P is basically price to earnings ratio. Basically the price of the stock with respect to the earnings of the particular stock. If sometimes what happens, the price goes up too much and the earnings have not gone up too much, the P ratio goes up, right? Because see, my earnings may be only so much, but my price has gone up massive. Like you see in Tanla, the price went up so much, but earnings is gone up by this much. So the ratio that is here, which is basically the PE ratio, is the difference that people are ready to pay for this particular stock. So basically it slightly got overvalued and it slightly fell. I would not say it's heavily fallen. It's slightly fallen below market expectations. Slightly, not overvalued. Okay. So Damani gira to market bhi girega na? Not that thing. Interesting thing to look at is Radhakrishnan Damani is actually buying massive amount of stake in India Cements. So start thinking, why is he buying stake in India Cements? Thoda socho, right? Okay. Now, basically expensive valuation is the biggest problem, and COVID-19 cases that are coming up again is becoming a slight worry. Okay. For Q3 FY22, Dmart reported healthy growth in sales. Okay. PAT by 22% and 24% year on year, below expectation. Who sets these expectations, first of all, is my question. But fine, below according to you, it's below expectations. Okay. E-com subsidiary Dmart Ready witnessed 38% growth year on year. Great. Gross margin declined by 20 bips year on year due to reduced products mix. However, EBITDA improved by 9.6%. It's fine. So from a DCF perspective, what is DCF? Okay, DCF is basically discounted cash flow, from depending on how the cash flow is working and how the revenues are working, and they discount it in the future and then they come back to current EPS. Slightly confusing. There's a lot of articles and videos on it. You can read it. But we value Dmart on the DCF basis, implying PE of 78x on FY24 EPS. So what this, which basically Geojit. Now they might be right, might be wrong. We don't know, right? We cannot say anything, but let's look at what they're valuing it, right? They're valuing the P ratio at 87 at FY24 estimate, 180 right now and 117. So this is what they're valuing it right now on a standalone basis. But apna Dmart has to gone par left, right, center. It's gone up to how much P ratio? 254. So they're saying it should come down to 180. Look at what they're talking. Come down to 180. Like, how can it come down? 180p is also massive. But basically, what the main idea, what Geojit is saying, there's nothing wrong with the fundamentals of the company. Is there something wrong with fundamentals? No. For a long-term investor, there is nothing to worry about. For a long-term investor, there's nothing to worry about. For someone who's investing now, for someone who's planning to invest now, wait. Wait for what? A small dip. It might come, might not come, but as you say, it is slightly overvalued in an overvalued market, right? So it is slightly higher. That's what I would say. But fundamentally, not wrong. Great. From a long-term perspective, a good bet also. And I'll tell you in the end why I'm not investing in this as well. It's my personal opinion. Nothing to do with the fundamentals, because if I didn't have that personal opinion, or I didn't have a set of rules and principles that I follow, Dmart is one of the best bets, and I would have just blindly invested in this, like Asian Paints, right? So nothing against Dmart for sure. Look at this, one more. Oh my god, not a BAP story. Please allow us to this ICICI Securities is playing on different game only. What is BAP story? First, all that you leave me, just tell me why this was not good. Dmart's Q3 revenue performance was underwhelming despite near normal operating conditions plus significant commodity inflation, right? Traders, retailers are assumed to be beneficiaries. Gross margin was dismal. Weak recovery in fashion. ये तो मतलब फाड़ ही रहा है, मतलब full, he's just ripping it out. EBITDA margin expansion was driven by operating leverage. We believe it could continue to, in FY 23-24 estimate, we believe it would continue to benefit from the consumer relevance of value for money positioning, price-led operating leverage, beneficiary of inflation, so he makes more money when there is inflation. Dmart's ready gradual expansion in an area to track closely. Okay, all this is normal. Extremely expensive valuation limit our willingness and ability to have a constructing view. So boss, everyone's saying basically the same thing. Right, ये तो मतलब मार रहा है, but he's also saying the same thing, that we do see that they have strong ideologies going forward, but the expensive valuations are limiting us. Dmart always goes up. Yes, it has gone up. It will keep going up. Slowly it will go up, right? Dmart is not a bad company for all the people who are asking about it. Dmart added 17 stores right now, taking its total stores to 263 outlets. Dmart seems to be adding stores of larger sizes as per our math. The average size of new stores is 50,000 square feet versus an average of 39,000. So if the average square feet is 50,000, that means more space for more revenues, for more products to be held, etc. So that will also do really well. All that is great. Okay, so basically their only problem is the valuation. That is what ICICI is saying. Let's look at Prabhudas, because Prabhudas is, okay, wait, ICICI has also given a sell rating, and it has given a sell rating maintained. Okay, but sell rating to what amount? Okay, the target price is 3,900. Oh, little deeper, 3,900, not even 4,100. Deep, dude. Okay, either which way, it's fallen down in the last 1 week by 10, from 4,700 to 4,900, but they're saying 3,900 tak aana chahiye. Do you and me know kidhar tak jayega? Me and you know? No idea, right? We don't know where it will go. But it has corrected in the last 1 week. Now you'll be like, Shashank, shit, 10% it's fallen in the last 1 week. What a loss. But in the last 1 month, if you look at it, it has gone down by 10%. Why? Because it was not doing anything in the last 1 month. But if you hold on for a long period of time, even if you held on for 6 months, you would have been at a profit. Even after the 10% dip, you would have been at a profit. So long-term game, Dmart is giving you money. If you look at zoomed in perspective of short-term game, it's crazy. But it had gone up to a massive high before that massive drop happened in October, where whoever invested in this high would have lost a lot of money, right? But now it will take some time. By the way, Dmart, now what will happen is you'll have enough time to get into Dmart. The reason why I'm saying that is because the result has come out and the market has given a thumbs down, right? So what will happen to this stock right now for the next 3 months until the next result comes out? For the next 3 months, this stock will go into consolidation mode. I would say wait for COVID to get over, wait for this third wave or whatever this massive wave is there, let it get over. And once it gets over, that is a good time to start investing in Dmart. Why? Because next quarter ka result aayega, right? Maybe from 9,000 they'll do 11,000. We will clap, fundamental guys will clap. But then suddenly these report guys will come and say below our expectations. COVID surge lasted longer than we expected. Even though they added 25 more stores at 50,000 square feet, which have increased their revenues too much, but a small 0.2% drop in their entire gross margins have given us belief that this is a very bad company and we will reduce our rating from whatever it is to 4,000 or 3,000 or 3,500. अभी ये हो गया, So what will the market, like people like me and you, will think? Arre, these report guys have said 3,500 means this stock is overvalued. It has to fall down to 3,500. Who? I mean, I don't believe this. I'll tell you what. You know why I read reports? I don't look at target price when I read reports. I look at what is happening in the research part. Why? Because if I have to do research, but someone else has already being paid to do research, तो आप करो research, मैं पढ़ूंगा बस. Like how you are all sitting, I'm doing research. Same way they'll do research, I'm sitting and reading. But I don't care about the target price. I'm like, future में काम आएगा क्या? Will it work in the future? Then it is fine. But the problem is, the country or Sensex does not run on the stock price or does not run on the financials. The country or everything runs on the sentiments. So if everyone comes and says Dmart over expensive, Dmart too much, बहुत भाग लिया यार, मतलब थोड़ा relax करने दो, then everyone starts selling. They don't even look at that they've got 17 new stores, 50,000 square feet, fundamentally strong, revenue's gone up, price to earnings ratio has gone, everything's gone up, right? So what is wrong with it? Nothing was wrong with it, right? Expectations was wrong. It was basically as equal to saying मेरा बच्चे को 95% आया, my son got 95%, but Rahul got 99%. I expected him to get 97%, so I am disappointed. So people are disappointed with the expectations that they had that DMart will do well, but did Rahul do well? Or did my son do well? Yes, I mean, I don't have a son, guys, but I'm just saying, fictional son do well? Yeah, he did well because he got 95%. So instead of being happy of what he's doing, consistent performer, I'm looking at 97, kyun nahi aaya? So this is very sad. So by the way, this is not only in India. So I'm not saying this is India's thing. This is a problem all across the world where research reports come out, and that's the best part. Everyone has their own agenda. So for example, Geojit said sell, right? ICICI Securities said sell. Didn't meet our expectations, sell. But Prabhudas Liladhar came and said accumulate in third wave. Straight accumulate in third wave. Target price 5,300. Now you tell me, whom should I believe, boys? Should I believe the one who said 3,900 whatever, or should I believe that 5,300? Now this target price is over a long period of time. It is not abhi nahi hoga target price. Target price is like in 1 year. So 5,300 and whatever it is, don't know. So that is what, it is very confusing. So do not go by this. Do not go by this. If you follow me, do not go by this. I don't care about this. Go by this. Become an expert in the business, then you will be able to connect the dots. If you become an expert in the business, don't care about the recommendations. Paytm ke saath, exactly, yes, you're right. All in one said the same thing. Paytm, same thing happened. The day of listing, Macquarie came and said downgrade. Okay, everyone on Twitter were like, Macquarie downgrades. Macquarie downgrades was trending, stock price trending downwards, right? It's crazy. And the best part is, look at the best part here with Paytm. People subscribe to it. If you really think it was bad, why did you subscribe to it? So first people subscribe to it. Pura subscribe kiya. Why? Because of the expectation ki wo upar jayega. But Macquarie came and said expectation nahi tha. Public ne bola maybe Macquarie is right. Maybe this expectation was lower. They said 40% downgrade. Sub, sell. And I saw someone else selling, so even I will sell. So that sell kept going down. Aaj tak recover nahi hua. So you see multiple factors. This has nothing to do with the fundamentals of the company. So again, for all the people who are my followers of me or watching my audience or my thing, I do not go by the target price. Okay, I only go from the futuristic perspective. I definitely read research reports. Why? Because I read the research report. The research part of the report I read. That is what it is, right? Research report. But I have not asked you for your opinion. तेरे को कितना लग रहा है? You can say 10,000 also. मेरे को फर्क नहीं पड़ता. You can assume whatever you want. You give me your research, I will put in my head and I will spit out my own thing. I don't care about your logic. So a lot of people go by this. Sadly, a lot of people go by this. And not only this, news में भी आ जाता है. It comes like this. HDFC Securities sees big downside in this stock. Look at the clickbait title here, which obviously if I look at this, मैं ये पढ़ूंगा मैं डर जाऊंगा. 100% I'll get scared. A normal guy who has not done research about DMart's fundamentals will get scared. So coming back to the main point, right? DMart is, from a fundamental perspective, nothing wrong with it. Is it overvalued in an overvalued market? Yes, slightly overvalued in an overvalued market. Agreed. I'm not saying it's not overvalued. First of all, everything's overvalued and this is too high. Either which way, it is too high. Okay. So if I wouldn't be surprised if it corrects to 75 PE or whatever 80 PE also, I'll be like, cool, this is overvalued. but kitna correct hoga pata nahi. This is now currently running on the expectations of people, right? This is only running on expectations of people. Expectations of people of for DMart is here right now. Reality is here, expectations here. So what happens over a period of time, both of them adjust accordingly. So reality matlab the revenue will keep going up, PE will slowly keep going up, and people's expectations will slowly start coming down, and eventually you will find a middle ground, right? Whenever something like this happens where the PE ratio is 254 is when the expectations and reality mismatch happens. But eventually over time, as we all know, me and you, the market corrects itself. Everything comes back to equilibrium, right? Everything come back. Yeah, put Rakesh Junjunwala picture and get views. It's like that. If I should actually put Damani's photo saying something with a sad face and with a massive down arrow like that, I'll get much more views. But that's not the point, because I'm not trying to tell you, I'm not making us I want you guys to think by yourself. I don't want to put that in your head that, oh yeah, this is a negative thing. No, it is not a negative thing. The world is saying this is negative. I'm saying it is not negative. I don't see anything that indicates it's a negative. In fact, the fundamentals are strong. The financials are strong. Now, I'll tell you my point. Why I am not investing in DMart, even though DMart looks amazing to invest. Why I'm not investing in DMart. Now, and I'll tell you when I will invest in DMart. Now, see, I'm a guy who looks at the future. Okay. I'm a guy who's in the tech space, who's in the IT space right now. I'm a guy who looks at from a futuristic 5 to 10 years. So whatever I'm investing in my Super 20, for me Super 20 or Super 25, whatever it is a 5-10 year horizon. Out of that 25 stocks, maybe 5 stocks will die. I'm completely okay with that. 20 stocks will win, but those 20 stocks will win in such a way that will give me mental returns, right? Now, I'm a guy who looks at the future, and I look at from a futuristic perspective that technology is evolving so much today that technology might disrupt companies that are not using a lot of technology. Do you get what I'm saying? Now, DMart is a very footfall heavy business at this point, right? Majority of their sales come from people physically going to DMart, buying a lot of items and then coming out. Why? Because it's a lot of wholesale-ish, low-priced products and all. So a lot of is footfall related. And I'm not saying footfall related will not be there 10 years in the future. It will definitely be that. People will still go and buy in DMart. But tell me one thing, if the technology is becoming better and better and better and better, and a lot of options, like say Big Basket has come with technology, Zepto in Bangalore, Bombay has come with 10-minute delivery, Grofers is coming with online delivery, Dunzo does online delivery, Swiggy Genie does online delivery, everyone does online delivery. When online delivery comes in, do you actually care where it's coming from? Is it coming from DMart? Is it coming from something else? Not much, right? You don't care so much about where it's coming from. But DMart currently is what do you call that? It's very physically oriented. It's very footfall heavy. Technology not so much. Obviously, a little bit of technology is there, but not so much. So I will invest in this only when I see them adopting technology and doing massive amounts of delivery also along with physical footfalls, right? Because footfalls is great, but I want to see them go into technology because I feel that future people are going to become more lazy. I am already so lazy that I don't even know when was the last time I walked into a department store, looked at all the racks over there and then bought. I don't even know when I did that last time, right? The older generation, my parents' generation, yes, they definitely do it. They'll still do it, right? Because they're used to that. But me and you are not used to it. So Mubin Ahmad is saying DMart can do online deliveries too. Yes. So that is when I would start investing, when I see DMart entering the tech space. Right, using technology for faster deliveries and for faster efficiency, and it's inevitable. It has to happen. They have to do it. It is not like they can't do it. They have to do it. Like Walmart, yes, Walmart has both massive stores because now you're investing in 50,000 square feet. Okay, 50,000 square feet stores, but COVID will not go for another 1 year the way I see it. Variant plus, Omicron, Delta Cron, Transformers, Omi, Delta Cron, something and all is coming right now, right? 4th wave, 5th wave, that's fine. But I see that technology adoption has to happen now in the next 2 years. It has to happen. The way the next 2 years technology will adopt, and if they adopt it, I will be the first one to go so heavy on DMart. Why? Because their physical presence is amazing. You cannot fight that physical presence. It's too good. Their operation model, the physical presence and their cost margins are amazing, best in the industry. But their digital presence is slightly weak. DMart does online delivery, but I'm saying majority of their revenue comes from the physical part, not from the online part. I'm not saying they don't do technology, they use technology. But the minute I see them openly investing more into technology and they'll start putting it in their research reports, they will be like, online grocery deliveries have gone up by this one, average order value has gone up. They will move towards that. When they move towards that, and I know that they are mentally moving towards technology and online delivery and whatnot, that is when I will go massive into it. So that is my, again, as I said, you can tell me the same thing what I told you right now. Shashank, we want your research, not your opinion. So this was just my opinion, not my research. My research says thumbs up, buy it right now. Like for me, for my research, right? If it is in my head, I look at a stock like this, I'm like, dude, this is awesome, I'm going to buy it. I'm not saying buying it right now will not give me returns. It will definitely give me returns in the future. I'm not saying no. But for me, I have a fear that if tomorrow technology disrupts the offline presence and they don't adapt and don't adopt to technology, will the decline start happening? So maybe 5 years, 6 years down the line, maybe I'll see a decline, right? The decline won't be great. I'll still be in profit, but it'll be a very bad decline phase, maybe a 1.5 year decline phase. Yeah, if they acquire a Blinkit or they acquire Dunzo or they acquire some Zepto or whatever, if they go and acquire someone, boss, within next day only I'll start investing in this. So investing in Avenue Supermarkets, not a bad thing, not at all a bad thing. Don't worry about it. But I'm waiting. My personal opinion is I'm waiting, right? But for you guys, I would not say don't invest. I mean, it's great. Asian Paints is another example of this. Asian Paints I've invested. Why? Because they don't need so much technology. And if you look at Asian Paints, it is a very slow, consistent compounder. Even if I do not catch this bull run, ye aaram se paisa banayega. No tension. Like there's no problem at all in life. Even if I don't catch the bull run and if I go to max chart and I just catch it till here, okay, which was before the thing, even here, if you calculate from 2008 to 2018, 10 times 18, I mean, what, 1700, 1800%, not bad. Not bad for a daily job, right? So this is a very slow, consistent performer, peaceful returns. So and I hope it continues, even though they are. So someone saying Damani is not an idiot, he will adapt new technology. 100%. Damani is not an idiot at all. I completely agree. He's the most smartest guy I know, and he will adapt to new technology. My point is, when he adapts the technology vocally with massive emphasis and using a lot of capital expenditure in it, that is when I would get in. I'm not saying it's bad right now to get in. If I get in, I'll still make profit. But I'm just saying, looking at what's happening around in the startup ecosystem and looking at what's happening with Big Basket and looking at what's happening with Zepto, Dunzo, Swiggy, Zomato, blah, blah, blah. So many things. I feel that they should also be coming out more vocally and saying, you know, Dmart quick or Dmart fast or just little more emphasis. Currently they have it, but it's like just having it. The majority focus is still building 50,000 square feet stores. So that is what I would say, right? But either way, that's fine. You don't have to go with my opinion. This is not bad stock at all. Not Asian Paints, but I'm talking about Dmart. It's not a bad stock at all. So don't worry about it. Okay, done. So I'll show you this 25 watch list on maybe my 100k thing. Again, guys, please like the video till then and subscribe to the channel if you're new here, because I feel a lot of people are here for the first time also. So it's completely fine. By the way, you should also keep looking at Damani's investment into India Cements. He recently bought more. He's constantly buying more. Look at this. This was in December 2021. He raised more. He bought more stake in India Cements. What a sweet smile he has. So whenever India Cements corrects, right, and India Cement is something that I've been saying from the last 1 year, but I don't have the confidence to invest in India Cement. He currently owns 22% of India Cements. 22% of India Cements is what Radhakrishnan Damani owns, and that's a massive percentage, and he's constantly buying. I'm not getting confidence for cement industry because it's super competitive. And if you look at the returns, right, this is why I'm not very keen on it, because if you look at the last 5 year returns, if I'd invested, I would have not made much money, man. Like if I'd invested over here, I would have made 87%, but the 87% in the last 5 years, it's not great, right? So I'm not very bullish on cements, but I know he's doing some game. I don't know what game he's playing, but it's okay. Someone saying bought Asian Paints at an all-time high. Yeah, actually a lot of people told me this, by the way, that, you know, Asian Paints is at its all-time high, and I think it's a bad idea. Let me tell you guys something, right? Buying Asian Paints at an all-time high is obviously kind of worrying Montu Singh, but I don't think if you're keeping it for 1 year, also you should not worry. If you're holding it for 1 year, don't worry about it. Why? Because Montu Singh, Asian Paints is a company that is a consistent compounder. So if you had bought it at this high, okay, from this high to this high would have taken you maybe 2 years, but you would have still made money. If you had bought it at this high, you would have gone to this high, you would have made money. If you had bought at this high, this high, this high, this high, this high, yes, you did buy it at a high, but I'm saying if you keep it for 2-3 years, at least 2 years, no stress, no tension, don't worry about it. Got it? So don't worry about it too much. Okay. Lot of people here attending the session for the first time. So thank you guys for that. Please subscribe, please like. I come here every Saturday. By the way, for all the people who don't know, my weekend research sessions are every Saturday, and it is also a charity stream. So every 3 months we invest whatever money that comes from this video, right? Whether it's super chat, whether it's ad revenue from my side or super chat revenue from your side, combine all of that, and every 3 months we donate it for a child's education. And we did that right now. I think 2 weeks ago we invested around 70,000 to a school in Ladakh. So we keep doing that. Again, I think that's my time for today. One sec. Wow. Can you guys believe it's almost 1.5 hours? Whenever I sit with you guys, I don't see how time flies. It's very weird. It's 1.5 hours we've been talking. 1.5 hours I've been talking also. But yeah, whenever we sit like this, I see that we spend a lot of time. Davneet, when will you do scenes market talk? I'm gonna come back properly on that. Currently no, but I will come back on that properly because we're launching the web version, and I can literally do a post market session after this on the web itself. So I'm launching the web version soon. You guys will see it soon. I'm gonna talk about the community angle again. So I'm just waiting for that to get ready. I'm currently working on that. But again, don't worry. I hope you guys enjoyed this session. I hope you guys liked this session. By the way, do take part in the giveaway that was announced last week. If you don't know about it, I'll put the link below. So do take part with that. Someone's asking, I have 7.5 lakhs. Where should I invest lump sum amount? I think just look at some of the good consistent compounders, guys. I mean, there's so many. There's Asian Paints. Slightly everything's at an all-time high. So I would wait for another month. But I would say allocate into mutual funds, allocate a little bit into US stocks, allocate a little bit into direct equity investing, but try to find good companies that are consistent compounders, right? A lot of them are there. Just Google it and try to find out some of them. And I've said multiple times about consistent compounders in my previous videos as well. Okay, so awesome, guys. This is me for today, signing off. Okay, I hope you guys had a great day. We spent 1.5 hours together, so I hope you guys liked it. Love you guys. This is me, Shashank Udupa, signing off. Take care. See you. Bye.